Hello, everybody. This is Raghu Kalakuntla. I'm a resident of Schaumburg. I am a SQL Server DBA during the day, and I have been doing mortgage loans since 2005, working with Ashok Lakshmanan, who is a well-known personality in the Chicagoland area. So before we jump into the topics, I would like to introduce our TAGC president, Venkat Gunaganti, to say a few words and introduce our guest for today.
Thanks, Raghu. Thanks for the welcome. TAGC, Telugu Association of Greater Chicago Tarapuna, Andarki Swagatam. As most of you know, TAGC is formed in 1971, and we are in the 50th year this year. For that, I thank all past 50 years, 49 years leadership team, board of directors, volunteers, members, of course, sponsors like Ashok Garu, and a lot of donors who made this happen. Again, without 50 years is a long, long time in our human life. So again, thank you for that. It's pleasure to welcome our special guest. I would say known to pretty much to all our community members who are homeowners or are becoming homeowners, thinking about buying homes. And of course, all our community organizations in the Chicago area. I should say, not only Chicago area, throughout the country, I should say. He's our long-term supporter. Again, personally, I know more than 15 years helping TAGC. I welcome Ashok Lakshmanan Garu to the show. Again, even with his busy schedule during this low interest rates and refinancing and everything, with his busy schedule, he had agreed to do an 1 hour session with us, almost 1 hour session with us. Thank you, sir, for that. Again, audience, we'll be on the Facebook Live. If you have any questions, you can post on the Facebook comments, or if you joined the Zoom session, please use the Zoom chat to post the questions. We will allow you to ask questions if you have time towards the end, but try to use the chat window to do that. I'll hand over to Raghu for leading the rest of the show. Thank you.
Thank you, Venkat Gunaganti, for your leadership going through 2021. And we all appreciate that events like this will help the community and to bring together and share our knowledge and help each other out. So our guest, Ashok Lakshmanan Garu, welcome. And I hope this next 45 minutes, 50 minutes will be a very educative session for everybody who is listening on this. So without wasting any more time, we will jump right into the topic. For the audience sake, Ashok Garu will speak a few minutes, about 5 to 10 minutes, on two important topics which we thought the listeners have a lot of questions about, and most probably your questions will be answered. The two topics are first-time home buyers and the investment property prospects, so people who are interested in buying investment properties. So Ashok Garu, please go ahead and give your comments or thoughts about first-time home buyers.
Thank you, Raghu Garu. First of all, I want to thank TAGC for letting me do this wonderful event. And thanks, Venkat Gunaganti Garu, for arranging these things. I love to help our community. Without the community, I'm nothing. And I know how much I got help from the community. So giving back this information, it's my honor. Thank you, Andy. So today, like Raghu Garu Cheppinamari, we are going to talk about two topics. One is the first-time home buyers. Second one is the investment property. So I'm going to talk about the first-time buyer thing, first of all. See, some of the questions from my past customers always ask me, sir, at what period of the time should I get the pre-qualification? I'm thinking about buying a home in next month, or should I wait until 1 month before, or 3 months before, or 6 months? I would always say start as early as possible. either you're buying or not, get information. It's very important. Most of the customer thinks about that. First of all, you need to have a 20% equity to have the to buy a home. Not really. You can have as low as 3 or even 5% is enough to buy a home nowadays. Especially the rates are very low right now. This is the lowest ever we've seen that. And we don't know how long it's going to last. Could be as early as next year it can go up. But even if it goes up, I don't know how much it's going to go up. So my suggestion is get earlier in the game and find out what are the things that you need to do before buying a home. Of course, you need to find the realtor. That's the first thing I always said. Go and find the realtor, whichever you want it. But before that, you need to know how much you will be qualifying to buy a home. So I usually don't pull the credit because most of the consumers and borrowers worried about that. Pulling the credit is going to ruin my credit score and everything. So there is a lot of sources nowadays to pull the credit. So that is good enough for us to use that. But when you apply for the loan, we have to do. So the first thing is you need to know how much you can be approved for based on your income to debt ratio. And second thing is the down payment. The down payment is the one I see a lot of times customers struggling. In what way though? Where the sources of down payment. The sources, sometimes they say like my friend is giving the down payment for the buy a home. It's not acceptable per the Fannie Mae guidelines. The money has to come from your own bank account. And if your spouse on the loan, then you can use the spouse's bank account. If your spouse is not on the loan and if the money is sitting in their account, you have to even get a gift letter from them. And you can borrow only sources from your 401k and no other people you can borrow that. And the money has to be seasoned at least 2 to 3 months. So if you borrow some money from 401k sitting in the account for the last 3 months, we usually don't ask for it, but we have every right to ask for the source where the money came from. So that is what I'm seeing a lot of struggles from the customers that, oh, I just borrow the money from my friend and can I use it? No, you cannot use it. That's the other thing. Second, the other one I'm always running into, applying for a lot of small credit cards. I'm seeing that. I'm not going to name some of the cards, but these are very common cards with most of our community. I'm seeing that having that. Make sure you pay on time. One. Sometimes you forget when you charge $30 on another store. I'm just going to use, let's say, for example, Kohl's or something, and you charge them and you forgot to pay. And make sure that you pay on time. That's other things I'm seeing that a very lot lately, that customers forgetting to pay that because one, they didn't even remember they have charged at the kind of Kohl's or JCPenney, these kind of places. And that's kind of ruining them getting the good interest rate, or even you had to put more down payment. So these are the very basic things I tell my customer to be watch out. The down payment, source and credit, and getting the how much you can be approved for. Sometimes they like to go for a $400,000 home where they can approve for only 300. So I see sometimes it's a struggle for us to get the loan. So these are the very basic things that I would say to be watch out.
Ashok, so based on what you spoke, that's a very good point. You said that before you talk to a realtor, talk to a mortgage loan officer, because you want to know how much you qualify. Based on that, you want to look at properties within the range where you qualify, and always err on the side of caution so that you overqualify rather than get into a tight position where you are unable to get through. Regarding the gift funds, Andy, can we take from close relatives?
Okay, yeah, the gift funds, immediate family. So you can borrow from your parents, your in-laws, your cousins, and Anthony. Anything beyond, no, it's not acceptable.
Okay, all right.
And one thing about the gifting, I wanted to mention that sometimes people ask me, hey, my last name is this, my cousin last name is different. So see, thing is, you are telling us he's your cousin or she's your cousin. So if they're not really your cousin and you're telling me their cousin, and they, if the bank find out, they can ask you, ask to pay off the whole loan. So we got to watch out what we are saying, that very carefully.
Okay. So the time is right, Andy, for first time buyers. You've seen that the interest rates are low, the loan atmosphere is really ripe, but also we are seeing that the home prices are going up. So to compensate for that, so you have to make your decision based on what's right for you.
Correct.
So regarding the credit, Sandy, can you talk a little bit about the scores, Sandy? Scores.
So what Fannie and Freddie is looking for is 740 score. Okay. Unless you have a mortgage history or anything, you may not gonna get that. But still, it is not hard to get a score. And make sure you pay bills on time. And I see our community, we like to pay off the bills very fast and pay off the car loans. You had to make a decision there, and just keep at least 2 years of car history. That will give you a good score. And don't apply for too many credit cards. And more than that, don't forget not to pay the credit cards. It's not like I don't see our communities, the credit score, especially less than 700 to 720. But lately I've been seeing 670, 680 kind of scores. Only reason, not because they didn't pay their car payments, they forgot to pay small department credit cards kind of thing. And don't apply for too many credit cards. Have it at least 4 or 5. You have to have a trade line. That's what I would recommend.
Okay. So 6 months, so what also I have seen, this is for the audience, that if before, say 6 months before you purchase a property, do not open any new credit lines or close credit lines.
Correct, and yes, absolutely.
Right, sir. Okay. All right. So
one more thing on that thing, sorry, Raghav. The collections, and don't let the credit goes to collections. It will spoil the credit very badly. So where you can go wrong is medical bill. Most of the medical bills. So be top of those medical bills and talk to the appropriate hospital or doctors to pay up. If it goes collection, I see it can go down as low as 60, 70 points. So you got to watch out for that.
Yeah, the important point there, Andy, Ashok, is that Ashok Garu. So first time home buyers, most of them, they are renting right now. So if they are moving apartments, so some of the bills might go to the previous address and you might forget, or the mail would not have reached you. So those are some cases which I've seen that people have forgot to pay their bills, old bills. And sometimes medical bills come after 3 months, 6 months also.
Yes.
So watch out for that, and always sign up for that free credit report and keep on watching it. That is free for you.
Yeah, for that, the medical bill, nothing you can do. For the other department store, if you're thinking about buying, I almost tell them not to charge for 2-3 months. So that way, when you get the statements, you'll get it within the 1 or 2 months. So the last 2 months, if you don't charge anything, obviously you're not going to get any statement. That's one other way you can avoid forgetting paying those small department store credit cards.
Okay. All right, Ashok, do we want to go to the next topic about purchasers who are looking to buy investment properties?
Yeah, investment property, like you said, Raghav, it's become very hot right now. The market is, but the rates are very good. So either, you got to do that. So right now is the best time to buy any property, right? Because of the low interest rate we ever seen before. But at least in a primary home, when people try to get again, let's about the down payment. I wanted to highlight something here. That's where we can go wrong. Minimum, we need a 20% down payment, and depends upon the home. Like if it's condo versus townhome versus single family home, you may get away with the 15% down payment on an investment property. You have to put more than 10-15% for sure, not 5%. 5% doesn't work on investment property, at least the banks that I have. That money cannot come from anyone. Whoever is on the loan they are the only borrowers can put down the down payment. Even if the spouses you cannot borrow. So you cannot say that, hey, I'm the only person who's going to be on the loan. My wife is going to be on the deed, but can I borrow or can I gift from my wife? No, the gift is not allowed in investment property, period. So you can again borrow from your 401k, and some banks are even okay with you getting a line of credit on your existing home. As long as you are on the loan, you can borrow only. What I mean, you are on the loan type, but husband and wife level, husband is not on the loan, then the husband is the one buying investment property. They cannot get the line of credit on the primary home, which is wife is on that, and use that money as a down payment. So wherever the money is coming from, it has to be their own funds only. That's very important.
So that's about down payment and qualifications and related to qualifications.
Pretty much same as the investment primary home. There is a rule 2836. 28% of your income you can use for your home expenses, primary home. The other, the rest 8% you can use it for your car loan, student loan, any other credit card loans you can use, the 2836. But I'm seeing that even the loan getting approved even 45, 47%. But when it comes to investment property, it is all depends upon their Fannie Mae approval. Sometimes I'm seeing that getting approved for 40, 45, sometimes it doesn't get even approved for 38 due to the credit. The credit profile is very important. You shouldn't have too many collections. You should be never late on mortgage payment, especially when you when you refinance. The first payment is very important, so you have to pay on time. So with that, you can get away with even 45% ratio to get the investment property going.
Go ahead.
Sometimes what we do, we use the income for the home they are buying. If we use it's like rental comparable report. So we can, usually it's cost about $100 to $200 something, depends, What we do if there is if the customers are very closer to getting qualified, we could use, they're subjective, we could use the income from the rental property and 75%. Let's say if the rental comparable report saying that this particular property worth $1,000 rent, we use $750 as an income. And I have done so many times, so it works. Here and there it doesn't work, but so many times that I have made it happen. So that's what I'm saying, that back in the first time, you have to see how much you qualified before you go buying a home.
So that's an important point, Ashok. So your the mortgage payments, interest, taxes, HOI association, all of that should come from your income if it's your first investment property, right? Andy?
Down payment comes from you. So after the loan is
down payment comes from you, and the qualification also should be based on your income.
Correct.
Now, are you not supposed to have a landlord history if you want to use the income from the proposed rental property?
Exactly. Yes and no. Used to be the case. Nowadays, we are using the rental income and they are accepted, but subjective. That's what I said. 99% of the time I've been using that. I have a lot of customers don't have a rental income, and then I've been using that.
Okay, so even if you are buying the rental property for the first time, we can still use the proposed rent as a qualifying amount.
Correct. Even I have a situation, one of the customer bought a primary home. He's living there. He's trying to buy another primary home. He was not qualified with both primary because his seller did not, his buyer did not buy his primary home. So what happened that time, he rented that home. He showed me that the security deposit and the lease. With that, the bank did accept the income from the primary home, which is living right now. So it is doable, but it's all case by case.
Okay. All right, very good, Randy. Do we have some questions? So I'm looking at the chat box, Andy. There is a question about I am on H1B and working here for 3 years. Can I buy a house? So that's one another important thing. And there is a lot of customers who are H1B and planning to buy homes. It's a big segment of
my big database is all most of my H1B, and you know, so yes, it's doable. Again, it's always subject to. It depends upon when is this expiring. If this doesn't expire in the next 6 months to 1 year, it's doable. Again, it's subject to. Sometime now with the way all the COVID situation where some of them are expiring the next month or so. And that's the one we are very struggling to get that thing.
Yeah.
So what some of the banks are doing, that when you're making the first payment, for example, if you close this February, April is the first payment, and if the visa is good up until May, they are letting the loan approve. So you can get it done. See, those things I would talk to them and ask more information and send it to the bank and get kind of pre-approved by them, so that way they feel comfortable buying the home. So.
Okay. So first-time home buyers, what kind of documents you would require? No, H1B, sorry, H1B.
H1B usually the visa, anything related to the visa paperwork and H1 expiration, and we never ask for any letter from their employer unless the thing is expiring and they're applying for it. That's the only time we ask customers, say, please talk to your employer to get me a letter saying that they have applied for it and it's on the way or something like that. So we usually don't ask for that.
Okay. So mostly the documents would be income, the passport, visa, and then the notice of action regarding their H1, showing that it does not expire in the next 6 months to 1 year.
Correct.
So those are the minimum.
Yeah,
and
this is where the rental history might help. We used to use a lot of rental history. Lately, I'm not seeing that. So we can prove the bank that, hey, look at this last 24 months, this person is paying rental on time. That helps. So like I said, everything is a case by case in a situation like that. So I have to submit this, then they have to get an exception done. Touch wood, so far, I never let anybody down. So.
Okay. The next question I see in the chat box, Ashok, is regarding interest-only loans. Is it still available nowadays? If so, what are the requisites for? Okay, there are two questions in this. Can it be applied to investment also?
Easy to say for investment, no.
Okay.
No. None of the banks are accepting investment property considered as more risky for the banks. That's why they're asking for a higher down payment and lesser income to debt ratio. So with that interest only, they believe that it's more risky customers. So one thing talking about that, in that case, I usually recommend customer to take 30-year fixed versus 15-year fixed. Especially if you are planning to buy more and more property, take 30-year fixed. That's probably a better scenario for you where you can buy more. If you have a 15-year fixed, your income debt ratio is going to be very high. So you might not be eligible for the future home. So try to go for the 30-year fixed. Again, I'm not a financial advisor, but I would recommend to go with the 30-year fixed only. And the primary home, and it's very rare that in interest only. I would say no almost. So 1% I would say yes, 99% I said no. There is not interest only, is not available at all. So.
Yeah, interest only loans are have gone. They are not available anymore. So yeah, that is a big change since the financial crisis, right, Ashok?
Yeah, exactly.
One other question is from Naveen. Can we take money out of our existing home?
Cash out.
And upright.
Yeah, cash out. Yeah.
Okay. Cash out refinance. Okay.
Yes, you can, and this is the best time to take the cash out for too many reasons. One, the interest rates are very low. Take as much you can, as long as you're going to use it for the right cost. Depends upon whatever your cost is. What I'm seeing lately for too many things, customer taking cash out to pay off their other debt, taking the cash out, buying properties, where I'm seeing most of the time it's happening for the down payment for the investment property and of course student loan. And then right now the rates are still low. Whenever you take a cash out, you had to keep the loan for 6 months. Then after that, if the rates are low, you can do the refinance again. And this is the best time to, if you can combine the first and second loan, go for it. Because the second loan, you may thinking that, hey, this is a very low rate and interest only. Why not I keep that? Right now, it makes sense. But after, we don't know, after 1 year, 2 year, 3 years later, if the rate goes up, the HELOC loans are going to be very, it's going to get very higher rate. And I would recommend to get some cash out. Keep the line open if you want. Then don't borrow unless you need to. So it's like a safety net for the customers. Yes, back to question, yes. You can go up to 75% of your loan to really to get a good cash out amount, a good interest rate. Compared to regular rate and term refinance, cash out is going to be higher rate. But you can go also, now they opened up for up to 80% again. Used to be 85%, now up to 80% you can go, but the rates are going to be a little higher for that. Yeah, it is doable.
Okay. My next question is from Santosh Konduru. He's asking about, for an investment property, can we show gift money for down payment? That is a no, we cannot use gift money.
Correct.
And also, if my friend was supposed to give me some money, which was a loan, how long before that money should be in my account before I go for investment properties?
See, if you give a money to a friend, as long as you do the proof, it means your bank account showing that, let's say Santosh Gar gave the money to John or something, payable to John, and then John is paying back to Santosh Garu, you can use it as long as you have the proof. See, there is a proof, right? There's a paper trail. I gave this money before, now he's giving me back. You can use that. But you cannot say that, oh, I gave a long time back, 6 months ago. Now he's giving me back and I don't have any records. You cannot use that. Most of the time I see that happens that my money I have in India, where I give it to my friend in India, Indian money, then or whatever the money in rupees, then now I'm getting the money here. No, that's not acceptable either. So you need to have a paper trail. When the money you given in India, as long as in your bank account to show, then you have to provide bank accounts from India and everything as well. So those are the monies that are very hard to prove to the bank.
That's a good question, Ashok Garu. Money from India, if you have sold some property in India and then you want to get money from India, so as long as you show them the Indian bank account and the conversion rates and things like that, you should be able to use them, right?
Correct. Absolutely. As long as, let's say, the money gone to your Indian account, I'm just going to use the ICCI account. So from there, you can transfer to your Chase account here. Then you need to show the paper trail. The money is sold. You need to show the property papers. Then the money is gone to your Indian account. From there, the money came to your account here. You can use that money for a down payment and everything.
I have one more follow-up question from Santosh Konduru. Is asking, there is a lot, if there is between between qualification and the closing, there is some time in between, and how are lenders going to look at the accounts in case there is a large deposit?
Very, very good question, Andy. I seen that happen very, very often too. What's happening from last year, after the COVID, even before that too, but after the COVID, bank is asking bank statements right before the closing. So we asked 2 months in a row bank statement in the beginning. Then we are asking one more time at the end. So nowadays, if the file takes 45 to 60 days to close, so then customer has to provide 2 more months. And if they see any large deposit, it need to be, the bank will question that too. So you need to be answered, unless they won't accept.
So
same thing with the credit as well too.
Can you explain what is a large deposit, Ashok?
Anything above $250 considered as a large deposit. So it can be your pay stub, or you home, like what you said in India, you sold the property, transfer here, yes. But then if it is like, hey, I have a cash sitting in the bank at home, I just collect all this, then I deposit $5,000. No, that money cannot be used.
Okay. The next question is from Kiran. my house is 6 months old. What are the requirements for refinancing? My credit score is less than original when it was approved. Would I get a better deal now?
Depends upon it. For the credit score is very important for a 20-year fixed, 30-year fixed right now. 10 and 15, yes and no. If let's say if the customer has a 4%, I'm just throwing some numbers here when they bought. Now, if it's 2.75 available, because of the score, he may get 3%. Still, it is the rates are better than 6 months ago or 1 year ago. So it's all case by case. If they're going from 30 to 15, I would say automatically yes, they will get benefit because the credit score is usually it's not a big deal for a 15 and 10-year fixed. So I wanted to say one thing, and I don't know, Kiran Garu can text on that part. I believe what probably happened on the score, people always think like, oh, I bought the loan, maybe the score went down. That's not usually the case. Maybe how many people pull the credit. So when they shop around, make sure don't let people, any mortgage broker like us, to pull the credit until you finalize the broker first, get the rates, then you let them pull. Because most of them, they want to pull the credit. Yeah, let me see the credit before. You can tell them that, hey, between 700 to 720, give me the interest rate. From 720 to 740, give me the interest rate. Then they can compare with the other loan officers or brokers. So this way, they don't have to pull the credit. If somebody is saying that pull the credit so bad to get the rate, then I would tell them that, ask the customer to rethink that, go with that broker.
So another question, follow-up question. This is from where do we get requalification without pulling the credit?
Yeah. From us, they have to call us and I will let them know. I will ask a bunch of questions. With that, I usually give the pre-qualification. Then I still ask them to pull the credit in the freecreditreport.com or TransUnion to get some ideas. See, most of us know our credit is good or bad, right? What I mean by that, if you have a collections coming to your home for the medical bill, you know that your credit already ruined. Only time when you don't know, you didn't even know that there's a collection, send the bill, or you charge at one of the departmental store and you forget about that. Those are the reasons where I see that the credit spender. One thing before I forget, I see a lot of people buy cars, and of course, there you got to watch out very carefully. Most of the dealers are they're trying to pull the credit multiple times. And they do 6-7 times in the same day, it can be ruined. People always like, oh, I heard from my friends and people that if I pull the credit again and again within 30-day period, it won't. It doesn't matter. It does matter sometimes, because how many times you pull? If it's 1 or 2 times, okay. If you pull like 6-7 times in a row, then obviously your credits can go down. So just watch out for those. After buying a home, don't apply for furniture kind of places and zero down payment, 0 payment. These are the things going to bring down your score. And as well as applying for a cable, obviously you have to have a telephone, you have to have. Just watch out, applying for a credit after buying a home. There could be other reason why the credit score can come down too.
Definitely, Andy. So let's wait for some more questions. I don't have any more questions. So yes, there is question about escrow account, Andy. Can you talk a little bit about the escrow account, what it is, and
the escrow account is a mandatory if you don't have a 20% down payment. But some other banks, I'll talk about first of all what is escrow account, then we can go.
Yeah.
Escrow account is something the bank collect the money for insurance and taxes, and they will pay on behalf of customers to the county as well as the insurance company. The customer get confused that, oh, I already have an insurance from Allstate. Why? Just an example I'm using. Why bank is paying that insurance? No, they're going to pay to Allstate insurance. You can always change the any insurance company that you want to from Allstate to State Farm or anything during the process. So they will pay on behalf of you. Sometimes customers are like, "Hey, can I pay by myself?" Yes and no. First, you need to have a 20% equity. Like I said, that some of the banks, even with the 5% equity, they are okay to pay by yourself. And some banks do charge a fee to waive the escrow. So when a customer comes, I go look around the rates. Then I tell them, "Hey, this is the rate I'm offering. And with this bank, you have to escrow. If you don't escrow, there is a fee to waive the escrow, or I can give you a rate from the bank where they don't care about the escrow." So it all depends upon the customer's view. Personally, I would recommend escrow. It's a less headache. You don't have to worry about paying every 6 months, and once in a year they will take care of that. Most of the customers worry is, what if they forget? If they forget, they have to pay the penalty, the bank. But still, you as a owner of the home, it's your responsibility to keep eye on those and make sure that your bank is paying to the county and insurance company. So,
yeah, definitely the homeowner gets the tax bill, so they can always log into the county website and see if the payment has been made within the deadline. Another question which came up is the listener is asking, can we open a company while we are on H1B for rental investment, for purchasing rental and investment properties?
I think what Prasangar was asking, can I get the loan on the company? I'm not sure. I'm assuming that. No, you cannot get the loan on a company name. It has to be a person. And if you, what sometime you could do after the closing, with the permission of the bank, you can transfer the deed to a company. But it is subject to banks and deed. Not all the banks are okay with that. So you need to call the bank and ask them after the closing, I bought this property, but I want to put the deed in LLC. Can we do it? If they say yes, go for it. But to begin with, no, we cannot give loan on the company.
We enter professional mortgage solutions. We are
No,
not
sorry,
giving loans to companies.
I'm a broker. I want to make sure that I'm a broker. I'm between the customer and the bank. So we don't fund anything from professional mortgage solutions.
Yeah, we are fundamentally a residential brokerage.
Broker, absolutely correct. Residential broker.
Yeah. So house types can be condo up to 4-unit properties, right, sir?
Absolutely, up to 4 unit, as long as the 4 unit is a residential property.
Residential property.
Correct.
Yes. I don't have any questions still from the customer, but 2 common things, Ashok Garu, we get is from customers is they call us and ask, "Oh, what is the interest rate today?" So how do you answer that?
Can you elaborate the question?
So over the years, when some customer calls up and asks, "Okay, what is the interest rate today?" I always used to tell them that I cannot tell you without knowing certain things, right?
Absolutely.
Whether it's a purchase, those kind of answers. Yeah.
Okay. Every customer is different. And what I mean by that, if the customer has $100,000 loan versus 200 versus 300 versus 400, 500,000, the rates can vary. It's not us. It's not even the bank. The bank has more the incentive they get if the loan amount is more than 400, 500. So they will pass it on to us, and if it is $100,000 or less, they have a big hit on that. That's why you and your friend can call me same time, but you have a 400,000, your friend has 100,000, both want to go 15. I may have to say different interest rate to that person versus you only because of the loan. Like I said, in 15-year fixed, the credit score doesn't matter. So the credit score nowadays, some banks are doing, if they have multiple properties and self-employed, they are putting us a different category, for their interest rate. I'm not saying all of them are doing that, or I would say other way around. If you're a W2 employee, they're giving incentive to get a better rate. So I would recommend that, you call and then give all the information, and then you get the interest rate. And it depends upon the score. It's a condo for a 30 and 20, you will get a higher rate. So yeah, it is not complicated, but it is all subject to the customer.
Okay. Yeah, I used to answer them like this, Andy. So first you will start with when somebody asks an interest rate, is it a purchase or a refinance? Then is it a single family home or a condo? Then what kind of loan amount, as you mentioned, whether it's above 400 or below 400, and the down payment again, 5%, 3%, or 20-25%. Then loan program, what kind of loan program you go for, and again self-employed W2, credit score, and then debt to income ratio, and whether you are escrowing taxes or not.
Yeah, the debt income ratio comes to the picture after we pull the credit and everything. But yeah, you saw everything right. That's exactly what I ask always the questions, ask the customer, then I give them a right. And it all depends upon the day as well. Sometimes people ask me, sir, is it Monday is the best day to lock?
Yeah.
Or Friday is the best day to lock? No, I don't know. It's where the stock market, it's not as bad as stock market where the rates vary that bad. But this last week was a very bad week. The rates went up. I think everybody's scared of the inflation. So it went up by 0.125 to 0.25% more than 10 days ago. We believe it come back. Now what they happened with all the volume, most of the refinance got a hit by the Fannie. And so the rates are a little bit higher on refinance versus purchase. Or I would say purchase has more incentive versus refinance. So it all depends on about the customers.
And then you answered a good question. A lot of customers also ask, oh, my friend is getting this rate, why am I getting this rate? I think you answered that. The next question is from Prashant Garu. He's asking, what is the interest rate difference between a primary and an investment?
Okay, that's a very good question too. See, usually anywhere, but it varies from 0.25% to 0.75. What I mean, people, if the customer is going to put down 20%, usually they get a very high rate, and 20% plus a combination of condominium, usually they get a very high rate. So 25% is always, you can get a very good rate in spite of it's a condo. Back to his Prashant Gar question, it's approximately 0.25% to 0.75. Again, it's a case by case. They can call me for more detail.
Okay. Another question from another listener is, will there be any fee for changing the home insurance company on the escrow account? How do we inform the bank about this change?
Very good question. I always tell my customers, anything you change, check with your with your bank. A couple of things I wanted to say here about insurance. Insurance is very important for the bank. You call the bank and tell them that I'm going to change from, I'm using an example, Allstate to State Farm, and they will tell you what to do, and you follow the procedures, and because they want to know who's the new agent is. After that, you call the bank again to make sure they have the right insurance. So it's very easy to change it. You just call the bank and ask them, this is what I'm doing, what should I do? And then just follow their directions.
Yeah, because if the bank thinks that it doesn't have the information, they will buy insurance for you, and that insurance might be very high from what you already have.
But they will warn you.
They will warn, yeah.
Warn the customer. Sometimes most of the customer think they spam, mail, or email. Anytime, don't call the number that you have. Maybe you can call your bank, right? You have already have mortgage statement. You call them, hey, did you guys send me this statement? And asking for this information. I thought you already have my insurance. What is the information that you need? And give that to them. One common mistake I see, or I should say, people missing that is when they buy a second primary home. It means they lived in a home for 4, 5, 2 years, and they had as a primary home as an insurance. When they go to investment primary home, they forgot to change the insurance from primary to it's a landlord insurance. That's a very important. If something happens and the insurance company can deny, I'm not going to say they will, they can deny saying that, hey, you said that it's a primary home and now it's investment property. So for that, I recommend one thing, try to stick with the same insurance company. So at least they know that you are buying a home, then they will ask you questions question, hey, what do you want me to do with your current insurance? We had to get the landlord insurance or something like that. So try to be same company for all your insurance, not the car and everything. You may get the multi-insurance discount, but primary home and investment, I would recommend. I'm not saying go for it, but I would recommend that.
Yeah, definitely, Andy. That's a good point. Another question is, I see different scores from TransUnion, Credit Karma, and it's causing a little bit of confusion.
That is a very good question. My customer always asks me, oh, I'm getting a FICO score. FICO score is coming from all. There's a 30 to 40 different kind of FICO scores are available. What we call ourselves like a tri-merge mortgage credit reporting. I would say ours gonna be the most tough one, or ours gonna be the very closer to what you see and what the bank's looking for. You can go any bank's website to pull the credit, or you can go to Karma, creditkarma.com, or you can just go to your transunion.com or any other big companies you can pull. You will see a big difference on that. And now they use different kind of algorithm or different kind of methods to pull the credit in. So that's why when in the beginning I tell them that use the Credit Karma, at least I get some basic idea. So definitely you will see our score is gonna be less than what they see in the Credit Karma and transunion.com. Both are score,
Yeah. So one is a retail score and one is the mortgage related score.
That's the numbers indeed. We go out of 840, 835 to 840, and the other people, they go for out of 930, 940 or 920, something like that. So then you need to see the percentile. If you are 800 out of 920, you check the percentile. Then out of same percentile, you can use at 830 to see what the score might be when we pro.
We have about 10 more minutes, and I have one other question. How long can a pre-approval be valid?
So usually they're good for 90 days, but now the market is very hot, or even depends upon the seller realtor. They will ask for the most recent one. So I've been telling my customers, just call me or email me to tell me that I update the new report. I'll try to do within 24 hours or even less. Sometimes depends upon that. I will give it to them. So since I'm not pulling the credit, I just ask a couple of questions again to make sure that they haven't had any other expenses or their income went up or anything. Once I found out that, then I will go and issue another pre-qualification.
Another question is, how often can I refinance?
Usually every 6 months is what we say. The customer has no prepayment penalty, but then the banks go after brokers or loan officers if they do less than 6 months. More than that, if you keep doing it every 2-3 months, you can ruin your credit. So back to the fundamental about credit, right? So please keep it for at least 4 or 5 months. That will build the credit history as well too. They want to see the history that you have 3-4 payments you have made. Then they will try to you can get the refinance done. Nowadays, the way the rates are now, I don't think it's going to go anywhere for a while. So you're not going to lose the boat, but nobody knows with the way the rates are now.
Another question is about LLC. If we are a 2-year-old company and has good cash flow, can we get a home loan on that company? And what does the bank look for in a LLC loan?
Maybe the bank cannot give loan on LLC for 100% sure. It has to be a person. Whoever is going to be on the loan has to be a person. They use the social security number to pull the credit, and they are the one going to give you the security. So we cannot get the loan on LLC.
That's all I have for now. Okay, I have one more coming in from Facebook. After buying a house, what is the suggested waiting period to buy a car or anything else so that we do not impact our credit scores?
So that's after buy means after close the deal. So that means you can buy and the process is still going to go for a couple of months. During the process, don't apply for any credit. Don't buy a car, especially cars can bring down the score big time. It could. and then don't change your job is what I always tell the customer. So after the closing is done, officially you got the keys. I mean, you can go for it. Definitely it will bring down the score, but then after that bank, they cannot go after because they already approved the loan based on what your income is. After the closing, what do you do is your business. You could do even the next day, you can go and apply for a loan for the car loans.
Yes. So yeah, that's all I have. Okay, one more question came up. Does PMSI support only Illinois or anywhere across the United States?
So right now, only Illinois. Illinois is the only place that I have license to do the business. Any place in Illinois, we can do the loan.
Yeah. Yeah, that's all for now. I have no more questions. Okay. What is the best way to contact you?
Right now, I would say text, WhatsApp, email, and phone call in the order. You know, so that way I can answer. Right now, I'm on talking and live with you. I cannot answer the phone, but I can always go and text back the customers and everything. It's only because of the volume and openly telling you, that's the thing. But text is probably the fastest. WhatsApp and text is probably the fastest way to get a hold of it. And call the office. Pretty much we are here 7 days in a week, so they can call office to get a hold of me. That's the other way.
We have about 7 more minutes, Andy. Do you want to just quickly give the customer what happens once a loan application is approved, is submitted, and between the times of that and the closing?
Perfect. Very good question. So once we take the application, we will pull the credit. We will pull the credit and lock the rate. It's in the application. Once we receive it, our opening department will go through, make sure any documents are missing. Once they do, we will call the customer or email the customer to let them know the documents are there. So it's very important to give the documents at the very first time. This can reduce the delay on the processing. Once we submit the file to the bank, we always right away order the appraisal. Appraisal could take anywhere between 7 to 10 days nowadays due to the volume, weather, and everything. So that's going to be the biggest time-consuming factor for us. Once appraisal comes back, approval in the meantime comes back from the bank, and we'll ask the customer to give the insurance information, who their agent is. So we collect their insurance information as well. Then we put together again and submit the file back again to the underwriting to the bank. We need a couple of documents from the seller's attorney. We wait for that documents to come back. Once we have that, we'll try to get the final approval. Once final approval comes, we usually inform the buyer and buyer's attorney, and they can. This is only for the purchase I'm talking about. So the buyer's attorney will go through the process with the seller's attorney to get the closing details and let us know. We usually ask for 4 to 5 days advance notice to set up the closing. Even though we know the closing date, but we need to get the official closing details from the buyer's attorney to set up the closing. Once we do, and then my bank will send the details to the title company where they are closing. They provide the final settlement statement, and then I give it to the customer. The way the form of sending the money is, you can get a cashier check, no personal check, no cash is allowed. Cashier check if the amount is less than 50,000, and if it is wire more than 50,000, you have to wire the fund. Talking about the wire, there is a lot of wire fraud is going. So I would always recommend my customers, even if you get the wiring instruction from your attorney or from one of your loan officers or me, call us and double check to make sure that we are the ones in the wiring instruction, and call the title company to confirm that is this the right information where I should wire the fund and everything. I even recommend sometime when the customer send more than 70, 80,000, send $100 first to see the title company receive that. Then you can send the rest. And I would recommend a customer to get the cashier check 1 day before, wire 1 day before, but they need to check with their attorney that is okay with them to make sure that the closings go smoothly. So this is the process. The biggest delay what I'm seeing is getting the title commitment from the sellers and getting the documents from anyone, from customers or insurance agent. That's probably the time delay process.
I have one more question, Andy, before I turn it back to our TAGC president. The question is, if we have already initiated the loan process and rates become better, can we relock the rate? I think that's what the question meant.
Correct. Everybody asked me that question. So I'm so familiar with that question. The way it's work, once customer locks with me, I lock with the bank. The banks lock with their secondary marketing behind the scene. So the lock cannot be unlocked once it's locked. Couple of options for the customer. Of course, the customer can go someplace else, then whatever the work we did and everything is going to be gone. Then also the lock with the bank will be ruined because the bank charged by their investors for the lock. Or I can take them to the different bank. Usually I don't do that because once I lock with the one bank, if I go take them to a different bank, the bank that where I locked, they don't like that and they can kick me out or they can penalize me by not giving the good rates and everything. Or I let the customer know, okay, let's let the lock expire. Depends upon the bank, 30 to 45 days you have to wait. Then you can get the current market pricing, but there is no guarantee. And after 30 days, the rate's going to be higher than what we originally locked, or it could be lower than what we locked. So it's all luck. So I always tell customers, do your homework first before you locking it. Once you lock, please try to stay with the same bank if you can.
Okay, so we have 2 minutes, Andy. Thank you, Ashok garu, for the very useful information and answering all the questions from the customers. I think this gives a very clear picture of the mortgage market for first-time buyers for investment properties. And again, you all can always reach out to Ashok garu and his office on the various contact ways he has mentioned. So I would give it back to our TAGC president, Venkat garu.
Venkat garu, okay, second, Andy. Okay, second. First of all, thank you, Raghu, again, for asking all this question and very patiently. Thank you, Venkat garu. Thank you, TAGC. More than that, thank you for all my customers. Have been supporting me for the last 20 years. I know I cannot thank enough. I love my customers. Customers means everything to me. So thank you very much again for giving this wonderful opportunity, TAGC and Venkat garu. Thank you.
Thank you, Raghu. Thank you, Ashok garu. I know it's a busy season for you again, spending for an hour on a Sunday morning. Again, thanks audience for posting questions in the Zoom chat along with Facebook chat. I think we answered all the questions, I think. Again, if you have any specific personal questions, please reach out to Ashok garu. I know Ashok garu is not a CPA, so we couldn't answer any tax questions we got. Again, if you got any tax questions, we tried to answer last week, I think. But anyway, Ashok garu, thanks for your time. Thank you all.
Thank you all. Thank you.
See you.
Thank you.